Good afternoon, everyone. I hope you're doing well. Given what's going on with the Iran conflict, it's probably time to have a look at some of the major stock market indexes around the world. I've had a few requests from clients to review this. Of course, we're starting with the US market, the S&P 500, which measures the collective performance of the top 500 companies, essentially the top 500 companies in America, as per the stock market index. And this time I'm not looking at the 24-hour contract. I'm just looking at the regular market index, which is currently closed. It's 12:30 p.m. Australia time. But there was some significant trading action last night. So we're looking at a daily candlestick chart. So every candle represents one day of trading activity. And we can see these key lows from the 10th of October and then on the 20th and 21st of November, and have a look at what's happened. If we draw a lot, now I've said in previous videos that I think key previous price levels are the most important thing to look at on a chart. Yes, it's very simple, but these key levels of support, you can see these were key price levels. There's a touch, sorry, let me just get that correct drawing tool. There's a touch there, a candle wick. It might be a little bit hard to see on the video. There's another candle wick there, support there. Notice it's bouncing from this level. And what's happened the last couple of days, it broke through, it recovered, and now it's closed significantly below that level. That's a little bit of that's a bearish sign, So we might be, now it's early days yet, but it looks like, well, the US market has effectively gone back to the same price it was really in August last year. So what's that? 6 months of gains are gone. That actually 7 months of gains are gone. And it looks like it wants to break down. So if we zoom back to a 5-year chart, we can see what we were drawing there. I would suggest that there is now increased probability that the US market is going to return to the 6,100 level. You can see that's a very key level there on the charts. Maybe if we can zoom into let's try a 2-day chart with each candle representing 2 days of trading activity, and you can see it a little more clearly here. We could show this on multiple time frames, but have a look at this prolonged negative divergence on the momentum indicator. So as the price was making higher highs, the price continuing to trend up, higher high, higher high, and then more up here. We can see the momentum indicators were trending down. That's a sign the uptrend was losing momentum. I've talked about this in previous videos, although I will acknowledge, I was starting to get, I was getting bearish around these levels when we were back to the previous all-time record high. I started talking about how I'd shifted my clients primarily, and keep in mind, I cannot give advice in this video. This is more so for my clients. If you, if you want to get advice, you'll have to speak to me privately. I can't do that sort of thing in a YouTube video, but I talked about around these levels, I'd shifted my clients to safer high income funds because I was worried about how expensive the market was. So we've been sitting in 10% income funds for quite some time now. So I was a bit early on that. I didn't think the US market could rally as much as it has. The AI bubble has become quite ridiculous. And speaking of which, we'll look at the NASDAQ now, which is the technology index, which, I mean, that's basically half the market now. You've got all these mega tech companies dominating the US stock market. And again, we're going to see the same thing with the high in August of 2025, pretty key level. In fact, we might even be able to draw, it depends on how you like to draw. I would suggest that while that is the key low there, and we can see that that key low has been broken, I would be more inclined to draw the line around this level. And the reason being is that it captures more trading activity. We can see the touch there, the touch there. It did briefly break below, but have a look at how quickly it recovered. So we could say that level held. We've got some candles wicking down here, touching, breakthrough, a little test there, and now a fresh low today, this morning, Australia time, which is, again, wiping out 7 months of gains in the NASDAQ. And we'll see the same thing on a longer term chart. It's been in this sort of massive uptrend. Let me just clear that because it's looking a bit messy. We can see again the negative divergence. It's been going on for a long time. So you might want to make a case that, maybe, the NASDAQ is rallying so hard. Maybe we don't, some of my charting tools are not proving to be that helpful, but we could see that, these markets are clearly, that was resistance. The touch there in November, that's pretty much the all-time high. We can see, every time it hit these levels, there was a selling opportunity, a selling opportunity, a selling opportunity, a selling opportunity. I'm not eternally bearish on stock markets. I mean, I'm still, my clients and I still are invested. We have a much lighter allocation than the regular, Australian super fund would have, or maybe the regular portfolio would have. But you could see their negative divergence. It was a sell there, a sell there, a sell there. There was negative divergence the whole way up. So you had chances to sell, chances to rebuy at previous support levels. Um, it's more about sort of managing risk, managing allocation. I've talked about that in previous videos. We're just sort of looking at where the markets are at. But I mean, doesn't this look like it's just rolling over? And most likely, again, the probability has increased that the Nasdaq will probably return to the 22,000 level. Um, Sorry, that's the wrong drawing tool. Let's do that again and zoom in. Let's have a look at that previous key high there. On the daily chart, we can see around 22,150, which would mean Nasdaq falling about another 5 or 6% from here, which I know doesn't sound like a lot, but that's that's trillions of dollars being wiped off the market. Aussie market not having a very good time at all. We're on a daily chart here. We can see it had this sort of uptrend there. I've shown this one in previous videos, breaking of the trend. You've got that. Let's zoom in a bit. You can see the previous low there from February, breaking down from those. It tried to consolidate a little bit there. Um, but what would be concerning is the Aussie market now it's above this level currently, but it did make a fresh low, and that was the lowest price since May of 2025. And if we go back further, we can see that the Aussie market, what day was that? Sorry, Aussie market on the 23rd of March traded at the same price level, really from September 2024. So it wiped out almost 18 months of gains. Now it is recovering somewhat, but this is pretty typical trading action. We see a key level broken, breaks the level, returns to the scene of the crime, see those previous lows there, and it's probably going to do some of that. It's Again, it's looking a bit bearish. I would be exercising caution. For my clients and I, we've only got about 10 to 50. Well, if I account for our short positions, we've got a roughly 10% allocation to the Australian stock market. And I am preferring safer, high income funds, safer index funds. I'm not trying to, or to the extent that we have any of those leveraged ETFs, we've kept allocations very small. Markets are looking pretty expensive here. Not a whole lot to show on. So just, I guess, wrapping up on the Aussie market, it's looking a little bit precarious, let's say that. And then if we looked at a 5-year chart, I should have given a little bit deeper of an analysis in the Aussie market. 5-year chart, you could see, I don't like these angle trend lines as much, but you could see that spike low there in 2025. You could say, this is the trend, and does it need to come back here to test that trend? And if it was to do that, I mean, where's the next level? You've got some key support levels here. That was the high there, the low there, the highs there. So I would suggest coming back to, I don't know why I keep clicking on this wrong thing, but coming back to let's see if we can delete that. Coming back to at that 8,000. I mean, that line is around 79.50, but I'd say the 8,000 level is a pretty key psychological level. So maybe the Aussie market needs to fall a little bit further to test that. I mean, we're talking about another 5 or 6% decline, so that would kind of line up with what we're seeing in the US market. I mean, if the US market's going down 6%, it would be fair to assume the Aussie market's probably going to somewhat follow. Japanese market, there's not a whole lot to show here. That's a weekly chart. Daily chart, I mean, if we go back to the weekly, the Japanese market looks very expensive. I mean, from the low in April 2025, it went up 91%. It's still up 68%. I don't really have a clear read on that chart yet. I mean, there wasn't negative divergence on the MACD there, so maybe it needs to make one more high. On the daily chart, it's a little bit too early, other than to say that the Japanese market had this massive run, and maybe you want to be a bit cautious there, but it really hasn't. It did have a nice decline from high to low, about 15%, but there's not a whole lot to read into this chart. I mean, you could make a case that there's still an uptrend going on there, that this is a broadening rising wedge, which is, generally these patterns are bearish, but it's also at the lower end of the trading range, so maybe it comes back up. So I would say, on these, well, at least the Japanese market, I would say I don't know. I would say I'm neutral, not a buyer, not a seller. Chinese market, looking at the weekly, again, similar thing, massive run in the Chinese market. I mean, if you take the September 2024 low, went up 54%, not as much as the Japanese market, but you could draw another one of these angled trend lines and say, okay, well, the uptrend's breaking. You could say that the Chinese market, again, we're looking at a weekly chart, a longer term chart. It was looking a bit bearish there. It was clearly in sort of a rising wedge pattern. You could probably extend that wedge all the way down there and ignore that one spike red candle and say, okay, massive rising wedge, negative divergence on the momentum indicator, so it was a sell there. Maybe it's a trading buy there for some people, and for me, going from 0% allocation in the Chinese market to maybe 5% for a few clients that could be a bit more aggressive and chase growth. You could say that it's holding these levels, it's bouncing, it's bouncing, it's bouncing. This conflict that's going on in Iran is not necessarily as bad for China as it is for some of the other nations. The case, the Chinese prepared, they stockpiled a lot of oil and gas, a lot of petroleum products, so they may be a little bit more insulated than other nations. If we look at the Euro Stocks 50, so top 50 stocks in Europe, again, we're on a daily chart. There's not a whole lot to show there other than, the top was clearly in. I show these signals all the time on the charts. We've got, price making higher highs, momentum indicators making lower highs. You got like a little bit of a rising wedge there. That's a bearish pattern. I mean, coupled with the fact that these markets were at, I believe that's an all-time record high. My data only, well, it'd have to be if it goes back that far. So that was at an all-time. So again, don't guess where markets are going. At an all-time record high, if an asset class is at an all-time record high, it's probably a sell or at least reduced position. And then you had bearish indicators. You had a rising wedge pattern, negative divergence. Other stock markets extremely overpriced. It was clearly a sell. Now it's doing something similar to the Australian market where if we come across to, sorry, I keep changing time frames. If we come across to a weekly chart, we can see these key highs there. So you've got the high there in 2025, lots of testing of that high, then it breaks above, returns to the scene of the crime, tests the breakout, and now we're coming back here again. Now it's currently above that level, but it has pierced that level fairly significantly. Again, not really a clear read here. I haven't yet started, for my clients, I haven't yet allocated to any of these European stock market funds that we can buy. They're more of a, an index fund or growth play. And, I'd be a little bit, I would say cautious. I'm not really liking this price action just yet. And if we couple that with what's going on with the US market, the potential for further declines, I think if the US market was to go down 5%, it would assist, for lack of a better term, the US market to go a bit lower. And then, of course, another thing that should be, when you see a chart like this and you're not quite sure, if you were aggressive, you'd say, okay, well, let's buy a little bit here. And maybe for a few clients that are more aggressive and chasing growth, I may, have a look at this, have a chat to them about it and see how they feel. We have seen from the high, there was a 13% decline, but it's only down 10, well, only down 10%, but it's back to the levels it was at in, February last year. I don't know if it's that goes back further than, no. Okay. So, you could say that 12, 13 months of gains have been wiped out. So maybe it's worth a look. But what concerns me is the US dollar. We're looking at a daily chart. We could see, and I've talked about this in previous videos, a strengthening US dollar, rising US dollar is not, uh, it's bad. It's generally bad for most asset classes, for most major asset classes. If you've got the US dollar going up, and we've seen it selling in precious metals due to rising interest rates in the market, bonds falling in price, bond yields going up due to the inflation that's in the pipeline. No pun intended, as a result of this conflict in Iran. But we can see the US dollar index, it's in an uptrend currently. It hit the previous high from January, and it got to the highs from November. So you can see, again, these previous key price levels are being respected. So no surprise the US dollar got to that hunt. It's also a psychological price barrier around the 100 level. It's been consolidating around the previous high, and the uptrend remains intact. So I'm not saying necessarily that it's just going to shoot way up like that. What I would suggest is that The US dollar is clearly in a short-term uptrend, and there's potential for further, for further breakout if it gets through this level. So I'm not saying that will happen. I mean, it could just sort of go sideways like this for a bit, maybe dip before it resumes a potential uptrend, or well, I would say it's in a short-term uptrend at least, longer-term downtrend. But be concerned if the US dollar, this chart is looking potentially bullish, and if the US dollar were to break out and move higher, that's probably not a good sign for stocks. And that would also, it's important to combine different charts and different markets to see what's going on. We've got the threat of the US dollar rising. We've got US markets looking like they could at least go 5 or 6% lower in the short term. They're looking a bit bearish. It's not looking great. They're breaking some key technical levels. So when you combine those two things together, it kind of makes sense. It looks like the US dollar is probably going higher. It looks like the US market could be going lower. And if we go to a 5-year chart on the US dollar, and TradingView didn't like that switch, we can see, and I've shown these patterns before, US was in it. I would probably exclude that low for right now. We just look at the pattern it's in here. You can see this is sort of a, you could make a case that there was a little falling wedge there. You could make a case that this is a, there was a channel with positive divergence on the momentum indicators. So as the price, and I've shown this many times before, price making lower lows, the US dollar index making lower lows while the momentum indicators are making higher lows. Positive divergence, that's a sign the downtrend is losing momentum and there's potential breakout or a reversal coming, an uptrend coming. Remember, a downtrend ending does not mean that an uptrend has started, but you can see on this chart, this weekly, it's looking like it wants to break out. You have the touch there, third time's the charm, consolidating. It's right there on the edge, but there's potential for it to go higher. I would say the next key level is probably, you can see this was a consolidation level here around 104. I would say if I was a betting man, I would bet on, over the next 6 months or so, the US dollar trending back up to that 104, 105 level. There's a lot of potential for that. So just be wary of that, because if the US dollar is breaking out of this channel, that is going to put downward pressure on a lot of other asset classes, including some of your favorite asset classes like gold and silver, which are having a tough time. But that's a topic for another video. I've gone too long already. Thank you for listening. I hope that was a helpful update. And if you watched this, probably a bit too late to mention, but if you've watched this on Instagram or Facebook, down the bottom left there, you can see at Aussie_anarchist84 is my YouTube channel. Please watch and support on the channel. Thanks for listening. Cheers.